very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuloko. How's your week been and how's business going? Tick tock, like they say. The clock is ticking. The days are rolling by. The amnesty period under the Voluntary Assets and Income Declaration Scheme (VATS) closes on Saturday, the 31st of March 2018. And so we ask you, have you filed under VATS? If you are self-employed, that is, you run your own enterprise, the so-called one-man business, the so-called business name, or you are in a partnership, or you run a professional practice, a law firm, an accounting firm, an estate agency, you are brought to tax under what is known as direct assessment, the second leg of personal income tax. One leg is pay as you earn for those in paid employment. That is deducted and remitted on a monthly basis. But under direct assessment, you are supposed to file on all your business activities in the year 2017, latest by the 31st of March 2018. These and many more will form the offering on today's episode of Tax Matters. After all, like we like to say, this is your home for education and information on taxation. In this regard, permit us to use our encounter with a viewer who called in from Akure. Mr. Isiaka Ibrahim called in to say that he just collected his business registration certificate on Monday, the 5th of February 2018. And he wanted to know how to fulfill his tax obligations. Good citizen, good Nigerian. We asked him if his business was or is an enterprise or a limited liability company. He replied that it is an enterprise. We want to share with you what we told Mr. Isiaka Ibrahim. One is that enterprises, business names, one-man businesses so-called, are charged to tax for their business activities under the Personal Income Tax Act, otherwise known as PITA, and they pay taxes due on those business activities to the State Board of Internal Revenue or the Internal Revenue Service, whichever they are called, in their state of residence. On the other hand, limited liability companies pay taxes to the Federal Inland Revenue Service under the Companies Income Tax Act, CITA. Now, if indeed Mr. Ibrahim's company is newly registered, then he is due to pay tax on his enterprise next year, 2019. Yes, 2019. Because the activities that he will carry out with that business name in the year 2018 become due for reports and for payment of taxes due at the end of March 2019, much like companies income tax filers who file on preceding year basis. The next point is that as Mr. Ibrahim is resident in Akure, Ondo State, he pays taxes due on that his enterprise to the Ondo State Board of Internal Revenue. But tax deductions on the emoluments of staff employed in that company, no matter the number of staff that he has in his employment, are deducted on a monthly basis under pay as you earn and remitted to the Ondo State Board of Internal Revenue. That is remitted on the 10th day of the month for the preceding month. Pay as you earn is a monthly affair. What we are simply saying here is that once you have commenced business, registration is a different matter, but once you have commenced business, your tax affairs begin from day one. And as an enterprise owner, your tax affairs do not begin and end with the State Board of Internal Revenue or Internal Revenue Service. You have business with the Federal Revenue Service. Yes, the FIRS. As you know, the Federal Inland Revenue Service collects VAT from all businesses and government agencies on behalf of the entire country, on behalf of the 3 tiers of government, on behalf of you, and on behalf of me. Because like you know, at the end of every month, the 3 tiers of government gather in Abuja to share revenue collected under the value-added tax. Therefore, you are advised, in fact, you are obliged to approach the nearest office of the Federal Inland Revenue Service in your area and register to collect taxpayer identification number. That is your registration, and you quote that on all your transactions. In fact, now, banks demand taxpayer identification number before they can open an account for your business. But let us return to VAT. You are obliged by law to issue tax invoices for all sales of goods and services. For the purpose of this discussion, let us call it a VAT invoice. You sell generators, or you sell TV sets, or you sell mattresses, or you provide fumigation and industrial cleaning services. You are obliged to state the cost of the good or service and add 5% VAT. When this is paid to you by the customer, you must remit it to the Federal Inland Revenue Service latest by the 21st day of the following month. If, on the other hand, you supply to a government agency or an oil company and you add that VAT to the invoice, they are obliged by law to withhold it. That is different from withholding tax. They also withhold value-added tax and are obliged to remit to the FIRS. In that case, still using Form 002, you must state that so-so company or so-so ministry or so-so commission of government has taken VAT on so-so transaction. That enables the tax authority, the FIRS, to pursue, so to say, to pursue that ministry, department or agency or oil company to make sure that they have indeed remitted the VAT. If by chance you did not collect VAT from anybody in a particular month, and on the other hand, no government ministry, department or agency or oil company deducted VAT from transactions that you carried out with them in a particular month, you are still obliged to file a nil return. Yes, NIL, nil return, using the same VAT Form 002. Failure to file returns in any month attracts a fine of 5,000 naira. And of course, you know that if that persists for a whole year, it will amount to 60,000 naira, an amount that a small enterprise can ill afford. Summary: your tax obligations as an enterprise owner begin from day one, and you are obliged to both the State Board of Internal Revenue and the Federal Inland Revenue Service. Just like limited liability companies are also obliged to both state and local government taxing authorities, in addition to payment of taxes to the FIRS. Next week, we'll be looking at withholding tax, the place of withholding tax in tax administration, and in that bid of yours to fulfill your tax obligations, as well as acquisition of tax clearance certificate, TCC, for old and new companies.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Welcome back. We hope you got some good tax education there. And talking about tax education, Mr. Babatunde Fowler, Executive Chairman FIRS, Chairman Joint Tax Board, is one man who cherishes tax education and advocacy a lot. He is always at home and on the road, talking to the young, talking to the old, to the converted, and to the yet to be converted. Call him to talk about taxation in the church, at the mosque, in the market. Mr. Fowler is game. For example, the week of Monday, the 22nd of January, through to Saturday, 27th of January, was quite a busy one for Mr. Fowler and his colleagues. From the 2018 Management and Stakeholders Retreat of the FRS, which was held in Lagos from Monday to Tuesday, Mr. Fowler moved to the Nigeria Economic Outlook 2018, organized by a foremost accounting and tax advisory firm on Thursday. And on Saturday, he was in church. Church? Saturday? Yes. On Saturday, the 27th of January 2018, Mr. Fowler was a major speaker at the Redeemed Christian Church of God, Lagos Province 35's Business Saturday program. Theme was Economic and Growth Prospects in 2018. Mr. Fowler spoke on tax reforms, expectations for 2018, amidst other distinguished speakers. We want to bring you snippets from Mr. Fowler's presentations at both occasions, as well as that of other speakers who spoke on tax-related issues.
Our focus today is basically to have an introspection into what is Nigeria economy going to look like in the next 18 months. What's likely to happen within the Nigeria economy that we should be conscious about? Most of us were aware, but especially when you hear it from the Director of Budget himself and the woman helping to shape investment promotion in Nigeria. And then you hear the taxman talking about where we're going to. So you could see some bit of conflict in terms of somebody wanting to promote the economy, investment, and somebody that says he wants to collect more money. Hearing from the public sector and the policy makers would help us in deciding and taking decisions on our business. How do we need to plan our activities, especially at the beginning of the year?
Mr. Ben Akabueze, Director General, Budget Office of the Federation of Nigeria, spoke on Federal Government Budget 2018. What is in it for businesses?
In 2016, there was a bullish attempt to diversify the economy away from oil. But it was quickly realized that you need oil to diversify away from oil. So if you look at the 2016 budget, it was very ambitious in terms of non-oil contribution to budgeted revenues. I think if you look at the 2016 budget, oil revenues were projected to contribute only 20% and 80% from non-oil, since gotten wiser. And for 2018, oil is projected to contribute 37% of revenue. So in the medium term, at least we still need oil to diversify from oil. So we must.
In the 2018 budget of the Federal Government of Nigeria, non-oil revenue is expected to contribute 63% to the basket. The Federal Inland Revenue Service is determined to achieve and even surpass this target. Mr. Fowler spoke next on efforts in this direction.
Our objective in 2018 is to achieve 100% of our revenue budget. And I think that will make Ben happy. And our focus is actually to lean on state governments. Unfortunately, state governments have not been very tax compliant. But I've met with the chairman of the Governors Forum, met with the chairman of the Commissioners of Finance, and let them realize a major area is in VAT and withholding tax, which actually belongs to you. Because basically, you use it to offset when you're filing your returns at the end of the year. And when we look at it from the federal government, on VAT, we only get 15%. 85% still goes to the state and local government. So it's actually in their interest to do that better. Now, what have we done to make it easier for you to pay taxes? Also to improve transparency and also accountability. Well, of course, I've deployed technology. And there are a few things that some of your clients may not be using, but I'm sure that the Deloitte is quite aware of some of these changes. First of all, in terms of the withholding tax credit notes that a number of you sometimes used to search for, anytime right now, once you have a registered email address, anytime a payment is made under your tax ID, you get an email alert. So you can actually download your receipts, confirm your receipts, regardless of what kind of tax or what kind of payment that you have made. So anytime you're requesting for a refund, it's not that difficult trying to put together manually credit receipt notes. Also, for those who work for other organizations or for government, where your withholding tax has been deducted and not remitted, within 45 days, you'll be able to also tell whether that has been done. And in cases where it has not been done, then we expect you to make an application to us, and of course, we'll follow up on it. Now, in trying to serve you in a very fair and transparent fashion, for organizations that work for state governments, for example, or even for federal agencies that deducted withholding tax but did not remit, it will not stop you from getting your tax clearance. Once we have all that information, we will actually, I won't say fight, but we'll stand in your corner and actually make sure that that credit goes into your account. We've also taken it a step further in terms of online filing. We're fitting up all our offices for your clients. Maybe not your clients, because I'm sure most of your clients are tech savvy. But for the little people, little businesses, they can go into our offices and use our systems, of course, free of charge, and do their online filing. And of course, they'll have someone who will also take them through the process. We also gave all taxpayers the opportunity to choose where their files reside in events that they have to come into a tax office. We do still have, by name, different tax offices. We have the large taxpayers, we have the micro, medium, but if, for your business and your convenience, you actually want to move your file from one tax office to another, you're certainly free to do so. And with the e-services that we have actually launched, actually you don't really need us. From the time that you start a new business with CAC, you can pay your stamp duties online, download your receipts, you can request for a tax clearance online, you can verify whether your withholding tax credits have been remitted.
On tax enforcement exercises,
regardless of what the tax laws say, we're still trying to be friendly. So before we even take any action, we first of all stick what we call non-compliance stickers. In case you're not sure or you forgot, we might just stick that on your wall to tell you that you're not compliant. And during the year, we did over 15,000 of that. And during that process, we got about 35.6 billion just from the sticking of the non-compliance sticker. So basically, we're just requesting that you partner with us. Let's make Nigeria great. Let's take Nigeria back to where it should be.
that does it actually. After all, this program is Tax Matters and we are more concerned about taxation. But let's hear from some of the other erudite speakers at the event. In tax circles, there's this concept of tax incentives, tax holiday for so-called pioneer companies, tax rebates, etc., etc. Do these tax incentives work? Do they attract foreign direct investments?
You know, many people jack us up and say incentives, incentives, incentives. Of course, they look at incentives, but you can see where incentives lie. They're not high up on the list. They're very low down. So investors don't, obviously there are different kinds of investors, and I'm somewhat generalizing. But investors generally do not start with incentives in deciding, where to go. Fundamentally, they look at the business environment. They look at how attractive the business environment is. And many feel, if you have a government agency whose name is Investment Promotion Commission, that it is your work, to improve the business environment. But there's no aspect of our lives that we leave to any government agency, however good that government agency is. But in November last year, we released this compendium of investment incentives that took about a year. NIPC and FIRS working together with a number of government agencies. It's a slim document. It's only 20 pages long, but it took about a year, to put together because of the level of rigor that we wanted to ensure, that when we tell investors, these are the incentives that exist in Nigeria, we can actually stand, by what we've put out.
My sense is that whilst there are fundamental challenges that we must address, the tea leaves that I occasionally consult suggests to me that the best of 2017 will be exceeded by the worst of 2018. Thank you.
Amen. Did I hear you join me in saying amen? It was indeed an intellectual feast, but they were not quite done. Immediately after the paper presentations, the paper presenters climbed on stage for a panel discussion moderated by irrepressible Bosino Mofaye.
FRS seems to be getting things done, but some folks feel that you are hitting them too hard to comply with tax. Why?
Well, first of all, I don't really think we're hitting them too hard. We have engaged all stakeholders at all levels. Even the small-scale businesses, we actually waived all the interest and penalties forever and let them start on a clean slate in 2017, meaning all arrears were totally waived. For the big businesses, we waived 3 years. And now with VADES, we've even waived 6 years. So we've given them opportunities to come forth, pay outstanding taxes, and even spread those taxes over instrumental payments of up to 3 years. So I think we have made it as easy and as painless as possible. At the same time, we have already looked at where there were challenges in terms of maybe our own levels of efficiency in issuance of manual credit notes. We've now used technology to replace that. And even where we find out that it's a state government and MDA that has made it difficult for them to obtain tax clearance certificates, once we have that information, we will give them a tax clearance certificate and pursue the guilty party, let me put it that way.
Honorable Chairman, I must disclose that I haven't complied with VADES. So the deadline is March. Today is the 25th of January. 5 weeks to comply. So will I get arrested on the 31st of March or April the 1st, which is April Fool? But, very interesting, are you considering an extension here? Or you have the right people in the net already you're looking at, and I'm not one of them?
Certainly there's no extension.
There's no extension, or there will be no extension?
There will be no extension. It was discussed at all levels of government, from the presidency to the Senate, the House of Representatives, and to even the governors. So there will be no extension.
Everyone in attendance had a good time. But listen to this wrap-up. Simply amazing.
Some of the rough calculation or estimate I always use when I'm talking to CEOs and CFO is that perhaps your total outgoing for tax in a year could as well be 20 kobo for every naira revenue you make as a business. For every 1 naira revenue you make as a business, 20 kobo. Most of the analysis we didn't have anyone less than 15%. And it flows in different directions, not necessarily company income tax. So VAT, for example, is 5% of your headline, makes that 5. Depending on how your cost structure, is. So maybe your gross margin is 60% or 40% or 20%. It's just a mix of how much of it is direct cost and overhead or salary, and how much of it you pay to shareholders and paid withholding tax on dividends. If you do all of the elements one by one and you do a calculation of, what between a 5% and 10% of withholding tax on virtually almost all of your costs, whether they are direct costs or overheads, you get, almost 5% of your top line eventually, being reportable by way of the withholding tax. The same thing with PAYE. It doesn't matter what fraction of the overhead or your OPEX, it's salary. Depending on how well paid they are as well, your effective tax rate as a business, if you are really fully compliant, could be averaging around 10% or 15% of the gross emolument you are paying to those individuals. And the list goes on and on and on, up until the company income tax when you pay, if you are not an IT company paying technology levy, so maybe about 32%, roughly of your profit. Do all of that numbers together, you may be ending up with 20% of your total revenue. Now, imagine how significant that is. And just think about it, what other element of your OPEX could gulp that amount of money? And the risk with this is that most of the taxes attract penalty roughly around 10% in a number of cases. Most of them attract interest for non-compliance, often around 20, 21%, or 19%, depending on what the case is, in spite of the fact that many of these tax items are not necessarily your own tax. But if you fail to manage them properly, you may actually be incurring roughly another 30% of what the potential liability is. So that's how important tax discourse had become, and that's the reason why this kind of C-suit need to pay attention when it comes to tax matter. Gone are those days when just one boy submitting VAT form at the tax office suffices for having a tax desk.
Time over time. It seems that the story on the Business Saturday hosted by the church has to be pushed forward to another episode. Same focus as this one, economic growth and prospects in 2018. See you around next week for more information and education on taxation. Bye.